Hey everybody, Boris last week, BK Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar for June 12th to June 16th of 2017. And very much the focus this week is going to be the dollar. It's really Wednesday dollar drama that's going to be taking the primary stage as the FOMC meeting takes place on Wednesday. And we have a whole slew of other data set starting on Wednesday. Let's take a look at the calendar first, and then we'll go on to the levels and the charts. So on the calendar, we kick off the week with UK CPI in RPI data, and as you can see, Kathy is definitely bearish the pound on that particular data set because we've seen a contraction in UK retail sales, UK retail prices off of the shop index. Going forward, then the Tuesday data set continues with ZOO, and then we have the US PPI data also negative for the dollar as commodity prices have been falling, which is likely going to have a decline in PPI. PPI not as important as CPI, but still an important data set for the Fed to consider. And then going forward, we have German CPI. None of this is really going to be material. And then on Wednesday, we have the UK jobless claims, which actually are relatively bullish pound, but unless we have materially higher wages in that particular data set, it's unlikely it's going to move the pound much to the upside. The pound is really going to be a swirl of political stories as everybody tries to figure out exactly how the new parliament is going to take shape. But Wednesday, of course, is the central day for everything else, because then we have the US CPI data, which is going to be critical to Fed's decision on inflation going forward. And here, Kathy is also relatively bearish, the CPI data, especially if the PPI data proves her to be right. More importantly, the retail sales data, and that's really been the big story in the US economy. While we have strong labor data and we have relatively decent, certainly not great, not torrid growth, the consumer has been far weaker given the kind of strong labor data that we have. And that is going to be a very important data set to take a look at, because if we have yet another disappointing retail sales report that that shows the consumer contracting, it's very difficult to imagine the Fed is going to be anything but neutral in this rate decision. Now, almost everybody expects the 1 1/4 rate hike to 1 1/4. The much more important thing, of course, is going to be forward guidance, whether the Fed is willing to really commit themselves to another 2 more rate hikes, one in September, one in December. It's very unlikely they're going to be very committal in this particular conversation. And this is going to be also a news conference, open news conference with the FOMC chair Yellen. So there'll be lots of room for interpretation. Everything is going to be focused exactly on what she has to say. So we'll be watching that very carefully as far as the US data set goes. I'll get to the commodities in just a little bit. Let's just finish up with the majors with UK retail sales, again, looking to be bearish coming out on Thursday. And then after that, of course, the really other big event of the week, the BOE meeting, which is very likely to be quite dovish because of course, the turmoil in the UK elections, as well as probably some very weak UK data coming up, especially on the consumer side. This theme of strong labor growth but weak consumption seems to be very common in both US and UK economies. And then we finish up the week with sort of minor data set out of the US with housing starts and U of Michigan data set. None of the data, according to what Kathy is looking at, seems to be overly positive for the US dollar. So if there are positive surprises to the upside, it may provide some lift, but if this data confirms Kathy's bias, very likely we're going to see further pressure on the dollar. So let's just now take a look at the levels of the majors, and then we'll take a look at the charts. On the level side, you can see euro still sort of remains those 113, 111 range, but obviously kind of midpoint at this point, and the forward momentum has kind of stopped. We'll take a look at the charts. That's really, I think, the important takeaway from the euro chart is that forward momentum has effectively stopped, which makes the euro long trade a little more problematic, and we probably require further dip before you want to start taking euro long positions. Yen, on the other hand, very much negative still, looks to be a negative trade into the beginning of the week, and I'll show you a couple of reasons why I think there's more momentum to the downside. And cable is just a shocker to the downside, with very much likely sell the rally story all the way up to 129, unless and until it can take out 129, 130 cable is very much a seller rally story all the way through. Let's take a look at the charts here, and you can see. First, let me show you what I mean about the euro really losing momentum. Effectively, if you look at the euro, it's been 2 weeks since the 22nd of May that we have not really made any fresh significant highs. And the fact that the euro is just kind of consolidated around these levels, the longer it holds around these levels, the likelier it is perhaps to distribute a little bit. It may just simply be basing. The key thing here, it's very difficult to really make a definitive analysis of how the euro is trading. It is holding the lows, and I think as long as the effectively the 110.50 low holds, the bias very much still to the upside. You still have a series of higher lows and a slow building uptrend, but the uptrend has met a very stiff resistance around this 113 level, and it's no surprise because if we go back to the weekly charts, let's just take a look at the weekly charts for just 1 second here. You can see there's just massive overhead on the weeklies around this 113 level. It is not an easy level to overcome. Very natural for the euro to come off here. The more critical thing, I think, is really how it trades ahead of this 11 and then 10.50 level, because that's the key support. If we can, in fact, as a matter of fact, I would say if we just can hold the 111 level, and then resume uptrend, then the next push higher very likely could put us all the way up to 115. Let's go back to the dailies for just a second and look at the yen, which is also very interesting story. So the yen story here, we tested this 109.20. We've come back up on a small retrace, but still the yen looks more negative than it does positive. It really needs to clear this 11.50 level to create a definitive bottom, a higher low bottom, which would be a very bullish formation. But yen couldn't end up on the highs of the day. As a matter of fact, sort of mid-range on the move here, and we're facing all of this monetary policy risk this week, and that's really going to be the big tell. If the Fed communicates that they are unlikely to raise rates in September unless conditions materially improve, it's very likely we're going to take out the lows here. And if we take out the lows here, that will be very technically damaging, and the next move could essentially take us down to 107.50. So the other big technical damage, the huge technical damage, was done in the pound. I think the only positive takeaway from the pound is that we didn't end on the lows. The lows here were today 26.35, and they bid them up about 100 points off the lows. But that's hardly great solace to anybody who's going to be trying to find a bottom here. There's still a very reasonable chance, especially if the UK data starts to unwind, and more importantly, if there is turbulence on the political scene, if May is having a problem putting together an effective coalition, if the coalition is razor thin, if Corbyn makes a reasonable challenge to put a coalition of his own, all of those things are still quite unknown. And I think that sense of uncertainty could definitely weigh on cable. There is to me, cable very much, even if it rallies, very much will find a lot of resistance here at this 129 level, because even if May is able to put together a coalition, and even if the UK data is relatively benign, she will be facing a much stiffer, stronger, tougher Brexit negotiations. And what's ironic about all of this is that while UK economy was doing quite well maybe 3, 4, 5 months ago when her position to negotiate Brexit was quite strong, it's actually doing much worse now than it was 3 or 4 months ago, whereas the European economy is actually doing much better. This will allow the Europeans to very much negotiate from strength and push the Brits around. So the potential for, just as we had the May breakout on her snap election call here, went from 125 and ultimately ran all the way up to 130, it's very likely, technically, that we're going to return right back to this breakout zone. So, to me, one of the clearest trades this week, although it will probably take a lot of discipline and a lot of very wide stops to kind of survive successfully, is a sell the rally trade in cable here, anywhere all the way up to anywhere, I would say, really realistically all the way up to 130. But if you want to cut your risk at 129, you probably would be okay. Maybe I would say, what's the high here? No, 129. Really, technically, you really would have to cut your risk at around 129.50. But anywhere through here, a rally back up very likely could wind up a move back down and the test all the way down to the 125s. So that's how the week shapes up. It should be very interesting both for the US and UK stories. I'll be watching that very, very carefully as the week progresses.